Yes, he did.
Teo, can you go over it a little bit, even, you know, not necessarily in depth, but just like a little review of what that looks like?
Yeah. That's what
I'm
actually
still learning.
I was actually gonna do a little overview for that, so everybody could kind of get acclimated.
Thank you.
Platform do I want to use?
How many different platforms do you chart on?
Really just TradingView, but I just have wait, did I?
Hey, don't nobody want that smoke. Look at that.
I know. I'm like, what is it?
Oh, it's my live wallpaper.
That's nice.
Mm-hmm.
Okay.
Is this on the new laptop?
Yeah.
How are you liking it?
Please take this off the screen because they done lost me too much money. I done jacked up with them. Take them off. No, I'm just joking. I'm just
yeah, it's getting a little bit rough.
They
yeah, do
coming back,
AMD.
though.
That's a good one.
I was gonna say, yeah, let's start with them.
AMD?
Yeah.
Yes.
Okay. So
everybody sound like they got beef with AMD right now.
Everybody does have beef with
I don't know why. That should be a good beef.
Yeah, I was looking at their chart and I did the EMA, I did the 20, the 50, and the 200-day EMA, and I think the 200-day EMA was like at 78. So I was looking at that candle. I'm trying to pull up your thing because I'm on my cell phone. Like it seemed like they broke that first level of support right there at 88. And I was curious to see if they were going to actually, hold on, I'm trying to follow your screen, go down to that bottom level, like around, go down just a little bit more. Go down, up to that candle that with the right there to the left with that doji. So I was wondering if they were going to test that and then bounce back up.
Oh, that's actually an area of point of interest for me too.
Mm-hmm.
So like technically I wouldn't say, so the way I look at this candle, actually not from the support view, but more so because of the big engulfing candle. I always look at those as like institutionally fund candles, like price can only move that far up because of like institutional. So I always kind of will find this as an area of point of interest is when I find bigger candles like that.
Because that's where they stepped in at.
Yeah. Because you see, it's like this price is moving, price was bullish and then pushed down and then it instantly moved up. That's to me tells me that institutions came in.
Yep. Okay.
Wait for my little mentee who was really a good technical analysis to join, but hold on. Oh, gotta restart his laptop. Okay. So, but just to get everybody, well, people still coming in, so let me make sure I don't want nobody to miss this. But so basically, when it comes to charting, everybody's kind of going to be a little different, a little bit subjective. But you want to find something that kind of works for you. For me, what works is using Wyckoff, but I am familiar with different stuff. Like some people really do just trade with like just using straight support and resistance and chart patterns. I'm not really familiar with a lot of chart patterns. I don't really do the patterns, all the different patterns. It's only like a few of them that I really pay attention to. But just think about it in general. The way price moves, if you notice, like price does basically the way we just see it in the market. It goes up, down, up, down, up, down, up, down. And then of course you get times where price will do something like just be on a downtrend. And so what you want to look for in that case is you kind of want to look for price kind of like showing you where it's kind of trending. And so the first thing you want to see, if you're noticing things like price is kind of doing where it's making higher lows and higher highs. So if we see here, prices is steadily increasing, higher high, higher lows. So higher lows, and then higher highs, higher lows, higher highs, higher lows. And then people use these trend lines because it kind of tells them that if it's respecting this trend line, then it's definitely bullish. And then sometimes when it breaks the trend line, then that's kind of an indicator that price is going to do a reversal or a retracement. I wouldn't say necessarily reversal, but this is retracement. It breaks the trend line, so it's a break of structure in the thinking that market that what price was doing before that type of price action is now halted, and it's either getting ready to continue or is getting ready to reverse or just move sideways for a bit. So those are some things that I just want people to be familiar with. These are the things that you can kind of use in your arsenal when you're just starting out. This is how actually when everybody starts learning technical analysis in the course, it's typically like some of the first things people always talk about: trend lines and seeing price move in a way that's creating these areas of interest where you see higher points, which is definitely an indicator that you are seeing an uptrend. So in the same fashion, here where we see we start here where we start seeing the lower lows and the lower highs. The same thing to, again, the trend line. And typically when you want to make your trend lines, so I just want to make sure everybody's getting in here.
So I have a question. Is there like a certain rule of thumb that you would use where you would start your trend line, like your starting point for it?
So you typically want to start it from a high or low point. So for instance, like you want to kind of get that low point and then follow the trace of what price action is doing. So for instance, if we was to go to the present, the way this price is moving, you will make your trend line from here. You want to kind of like follow the path.
Okay.
And connect it to like the most bottom point you see. And then you want it to kind of hit as many of the points on the way down. So you kind of, and everybody draws their trend line different. Like there's not a perfect way everybody does it. It's more to give you a general, oh, sorry, people are chatting. Oh, everything is everything. But you just want to make sure people are, you just want to make sure that you have your trend line following the path and that you are hitting, that there are points along the line that's hitting the trend line.
Okay. Thank you.
Okay.
So now, because it's at the bottom of the Bollinger Band, is a good time to get in.
Yes.
That's a question.
Yes, that's what are you asking or was you just saying?
Both a statement and a question.
Okay. So what do you think?
I don't think it's going to go back as far as that to the left. I don't think it's going to go that far down.
So as far as you mean like right here to the second floor, or
yes.
What are you thinking?
That where you were down a little bit further, where you were left. Yeah, I don't think it's gonna go that far.
Okay, that's fair. What about here or here?
I don't think it's gonna go that. Well, go back to the left.
That the first.
Maybe, but
This
not.
one, this,
I don't think there. No.
okay.
I think it might hit there. That is that the first support line?
Support line from here?
Yeah. No.
Some people might count this one, but this one does look a little bit better because of here. Technically, I mean, if he was really anal, somebody would probably draw one here, and then somebody would probably draw another one here. But you typically want to have like several points. The reason why I'm saying this is because you see here a point, you can see kind of like a little resistance and then a support area here as well. So now you see, because typically what's a really good indicator too is that if you notice something was kind of like a resistance, and then you notice it was like a support on the other side, it's a really good indicator that's like an area point of interest. So just a little to keep in mind, but this is just this will also just give you an idea of like the level area that you want to be in. Because of course, like just always keep in mind, you're never gonna get it perfectly timed right. Sometimes you would try as hard as possible, but it's just the market would just always humble you. So you just want to keep an area, like a zone area in mind of like what's the demand area and then what's the supply area. So this is a good area of support area. This would be another good area of support. Another one would be here. So these are different levels. And then you can kind of think of these as like the same way as, if you remember, like Mark Rochelle was like, okay, like support 1, support 2, support 3, just to give you a different level. And that tells you a really good indicator of like how much of a breaker structure you're seeing. So for like up here, you could kind of have like resistance levels, resistance levels, resistance levels. How many each break, each one breaks you, that kind of tell you, okay, sort of bearish. And we're seeing signs of a downtrend. So let's keep that in mind. No, I'm actually with you, Shimon. Like as far as how far I think it will go, I think if it did drop anymore, I think it'll be around this area. I think it might. I think it might even stop like right here where it's engulfing candle, the candle before it open. So typically they usually will like, if you notice here, like even here, they'll kind of dip in, but price came up and it broke back down the structure today. So, but I think it will be, if this will be the first will come down, so my little mentee, Des, what you think? You think this will go down further? I know you was kind of actually thinking it's gonna go further down, if I remember.
He muted.
Oh.
Here we go. Okay. Yeah, I didn't actually anticipate it to go further down. It was just the fact that, because remember I told you I saw distribution, so, and I was like this liquidity in the bottom, but I mean I did change up my analysis just because of like how things retested, but I do know on my, hold on, I'm gonna check something really quickly on my screen. He's gonna stay on time with the screen real quick, but let me go ahead and just check something. Yeah, so I just had distribution, which is like, you know, a whole nother concept of something, which is, I wouldn't suggest learning when you first start. But let me see if I can find AMD. But I originally had it going to like 71, but
yeah, I said no, scratch that.
It wasn't gonna go there, you know. But so my thing was just like, but based off analysis, my thing is like I do still see retesting around the 85, playing around the 85 area, you know. So but it did exactly what I wanted to. I wanted to go to 93, then reject right back down. So it did what I did. I expected it to do. Like it created this little distribution schematics, and then made its way back down. So that's what I was expecting. I'm like, when I will later down in Zoom call, like show you exactly what I saw and then like demonstrate that process. But yeah, I do think AMC will go a little lower.
D.
Oh,
Put some respect on AMD.
Yeah, we spent a lot of time on AMD. But yeah, I do expect AMD to be going a little bit lower. I mean, I did see some accumulation schematics, but it didn't react how I wanted it to. But in terms
pause real quick. So for y'all to be familiar with what he's talking about, we kind of trade a system called Wyckoff, one of the 5 founders of technical analysis. And basically what that basically is encompassing is basically looking at market structure and seeing how market structure plays into being used with smart money. With smart money is institutional funding or institutional banks. So accumulation is when you're getting ready to see a breakout. So basically a bull rally. And distribution is when you're going to see a bear rally. So, well, not a bear rally, but a bearish trend. So you'll see like a drop in the correction when you start seeing signs of distribution, and you'll start seeing signs of bullish trends when you see accumulation structure. So that's what he basically means when he says accumulation. So he was saying he sees signs of accumulation, and you typically have where markets do something like come down here, mark down, and then they start getting ready, as we saw after the split, that it was just doing something like this. And what you're seeing is it's getting what it's doing is it's acquiring a lot more supply during this whole thing. It's acquiring, it's basically prices moving in a way to acquire liquidity to get ready to go on the bull run. And the flip side, what you also have is where price would do something where it goes on a bull run, then it stops, and then you start seeing it go here. We call this a bear trap. Comes back, and then we test it, and then it drops. And if you flip the reverse of that, typically, I could draw the same thing back. The bear trap. So that's kind of what you get with price action. But yeah, my bad. So just wanted to make, because there's a lot of new people that joined. This is the second semester to come up series. So just wanted some people who are new to kind of like be familiar with it. And I'll put a link in here that y'all can read about Wyckoff and market structure and accumulation, distribution, and redistribution and reaccumulation. But continue.
I'm going to continue off. Okay.
Yeah, my bad.
So yeah, as you mentioned beforehand, so yeah, that is the general description of Wyckoff. So yeah, I did see AMD going a little lower. I'm gonna check the volume really quickly, just to see something real quickly. So let's see.
The volume.
You said what?
Do you want me to put the volume on?
I'll just do the regular volume. Because that's how I check like the buying strength versus selling strength. Because I don't use any other I do want to remind y'all that everyone trades differently. There's different types of ways to trade, but I don't use any indicators except for volume and market structure. And I mean, it's been working pretty fine for me. You know, unless I do decide to go into day trading, then that's when I would probably imply more, more indicators.
We don't talk about day trading and weeklies.
But I'm just saying, if I do possibly switch into day trading, then we'll see. But as of right now, I'm definitely trying to avoid that. But yeah, but let's just say I do decide to do day trading, then I would have more indicators in my system just to imply more confirmation. But yeah, as of right now, I don't use any indicators whatsoever, other than volume, which I don't really consider indicator. It's just something that's there. But yeah, with that being said, I do see the seller's volume, getting lower, right? So buyer begin to increase for me. So the volume here is diminished for me. So technically,
quick, Chris, I just want to say something real quick. So what he means is that sometimes when we try to see if we see the same thing you see in the charts, you can do the same thing with volume. So if you start seeing the green buying power increase, then of course you will see a lot of price increase in the bull and the price action, right? So the same thing if you start seeing the reverse of it, you see the same thing here. Well, buyers are starting to decrease, so that means you get a lot more supply. So that means you're not getting into a bearish trend. And then you kind of want to look for a harmony nature with volume, because sometimes you'll see like areas where there's like a big candle, but the volume will be low, which is not, that's not an agreement. That's not harmony between price volume and with price and volume. So that's kind of an indicator that that's not a really, there's not a really good amount of supply into the market. I mean, demand into the market. Then that could be like an exhaustion of like all the demand that's left, and price will start dropping. Vice versa as well. If there's like a big sell candle, but there's not a lot of volume in the sell candle, then that's probably an indicator that sellers are kind of like exhausted as well. So you might see a bull rally. But yeah, continue, bro.
Yeah, so with that being said, with volume, I see like a diminishing volume. So you get like the further right, like on that side of the right screen there, you're gonna see how the volume is actually, you know what? Oh, you're looking off the daily time frame. So with the daily outlook, I can't necessarily say that the selling volume is done.
Yeah.
But like I did say, I do still expect AMD to like possibly go under 85 and maybe retest around the 82 area. I don't want that whatsoever, but that's just something I see because I'm currently in AMD myself. But that's what I'm possibly anticipating. But my main issue is that I saw distribution schematic. So that's my main issue here. So like as you can see, if you go to the 4 hour, you're gonna be able to see exactly what I'm basically saying. So you're gonna see like three, I would say like, you know, three little triangle formations, right? So it's like 1, 2, 3, and then it's gonna come back and see a little test. And then normally what happens after a test that it usually falls all the way directly through. And that's exactly what you're gonna see. But my only issue here is that off the daily, the volume still appears a little strong, right? And I'm looking from over here on my screen. Let's see what we got here. Based off zones, it can buy. Based off volume, can continue to sell. Based off distribution, can continue to sell. Like over, technically, I still have a lot of selling into my platform right now, but there's a lot of other ways you can see buys. But yeah, just like you found out green line right there. Is that green line on 83? Yeah, that's exactly where I was like taking a look at possible rejections as well. So because you can also see, I don't really pay attention to candles, but there are 3 gigantic selling candles which also show possibility of continuing sellings. So that's just another way to look at it. Like I said, there's like a variety of ways how people like trade and whatsoever. But yeah, that is
so let me jump in real quick. So like something for that I also time to look at too. So if I start seeing like big candles drop down here, so this one I like it kind of like brought back up, but a really scary indicator to me is when they're like almost like in sequence. Like I like it when they drop like this because that means there's like buyers pushing price back up. But when they start dropping like this, then it's gonna get a little nervous. But what you also kind of look at too is that when prices drop in, even though it's dropping like where they just basically closing, opening right in sequence, the volume, I mean the size of the candle itself is also kind of sort of decreasing. So that's kind of a good sign. However, it closed this way, so that doesn't really make me comfortable because this body could just be the fact that it closed like that. I mean, the trading hours closed. So this makes me a little nervous still, but that's something that I'd like to look at too, is like that makes me make me a little bit more comfortable with trends, is just seeing the body of the candles and seeing candles open closer to the end of the body of the candle. So yeah, but yeah, go ahead. So these last candles, you know, the three crows or whatever they call them, 3-step ladders, or what do they call them?
You said what?
3 black rows.
I don't know where I left off from. Let's see. Repeat that last question. I didn't hear it. I saw one out. Okay, there we go. You want me to continue off?
Yeah.
Okay. So yeah, back to what I was saying. That's basically what I have. So candles, like I said, if you're it depends depending on where you trade, right? Whether you're new or you're intermediate or advanced. When you first start, candles may be one of the few things that you look at. I don't look at candles at all unless it's like an engulf candle. But from what I do remember based off my memory when I was like first started trading, we used to look at the the 3 buying candles, the 3 selling candles. Personally, I don't think that thing matters at all. But like I said, everyone trades differently. But yeah, based off this, if what I was seeing on the screen, just like Tyler described, I was just seeing the sell from that formation. But my overall projection from there is just maybe we should start with support and resistance for beginners. Absolutely. I mean, that's what Ty was going over. Yeah, he was going over that. I was just going based off my projection off AMD. But yeah, but back to what he was saying is, so let's say that we are just discussing support and resistance here, right? What we were basically anticipating is that we're going to want to see price either reject off where price is currently at right now. Because as you can see, if you go to the far left, you can see where there's a bunch of zones, okay? Like a lot of rejection to exactly where he has the mouse. So just plenty of rejection on that area, okay? And then if you just make, yeah, right there, and then you're gonna see another one right there. There's 2 rejection on that zone. If you go to the left right there, there's 3 or 4, you have 5, and so on. Even up there, that's 6, okay? So now we know that we have a very strong and solid, support and resistance, like a zone. I just call them demand, supply and demand zones, okay? So
real quick. So like when you're charting, it's always useful to go back to the past. So like look to your left and just see what price has been doing around that area. That just lets you know if it's a point of interest area. My bad, bro. Continue.
Yeah, so price action from the left always matters. Anything from the past will always be important, okay? I mean, I'm not saying things from 1998. They could help, but I don't look that far back. But you also want to look to the left of your chart to see where you can have possible rejection zones, such as trend lines, supply and demand zones and all that kind of stuff. But yeah, so as we can see, that is a strong supply and demand zone. In other words, support and resistance. So if you were to just draw either a rectangle or a horizontal ray, you're going to basically see that it's a pretty valid zone. So when that is done, you're going to see that this is a possible rejection zone. So based off just the simple support and resistance zone, this is where we're going to expect price to, reverse and make its way back up. But the only issue here is that you can't just trade off support and resistance. Okay, you need additional confirmation, such as indicators, price action, market structure. What else is there? Wyckoff schematics. Like there's a variety of other things, but you never want to just trade off support and resistance. But it's just a good way to look at price action, see possible rejection zones. That's the only reason I use zones for. But other than that, I'm not a big fan of saying, oh, okay, I'm going to trade this because I see a strong rejection. Like that is never anything that's enough for me to say, I'm going to take this trade or I'm going to confluence into my any of my fundamentals, okay? So, but that is like the basics of what we call, that's a support right there. But if you look to the left of the screen, you're going to see possible resistance. When price breaks through, they come back, it becomes a support. So the same line can be used as support and resistance. Let's see what else I can add into that. When you use trend lines, those can also be used as support resistance, but there's a variety of ways you can do it. So you can go extremely fancy on your charts and make it whatever, but like I said, there's a bunch of ways you can make rejection zones. It just depends on how you do it. So if you were to just draw a trend line almost anywhere, it could be a rejection zone. Like Tyler can probably just draw one anywhere. Like let's say there's, yeah, he just draws it right across. Like up there. So if you make it go further, you're going to see how the very high point of the area possibly, yeah, there you go, rejected. So that would be what we call, a resistance on this particular location of the price. So like I said, there's like a bunch of ways you can make support and resistance zones. Trend lines could be used that way. Even your indicators could be used as a support and resistance, depending on what kind you're using. Like I know some people use the EMA or the moving averages as rejection zones. It says I thought Ty was
So like no, I was actually gonna say so like yeah, so like I put the EMA, the 50 EMA. So what you could do is and I got the Bollinger Band on here because that's what we do in the come up. I want y'all to remember, if anybody remembers like the last one. So this is where you could like start using like multiple confluences. So you can like use the fact that like this is now an area that you look at as support, and it's right now meeting at the bottom of the Bollinger Band. So that's two confluences. Your Bollinger Band and your support line meet up. So now you have two. So like maybe you could have your trading plan, your technical analysis be something like, I need 3 or 4 or 5 confluences. And you already have 2. Another one could be that your EMA, you don't buy nothing that is above the 20 or the 50 EMA. So right now we have the EMA and we have the 20 because the 20 is the Bollinger Band. So we have the 50, another sign. So that's already now another one. If you only buy when price is below the 50. So right now we see this is the 50 is the blue line. So that could be another confluence for you that price is below the 50 line. And if you want to make a little sweeter deal, another thing that's like a kind of an indicator sometimes is called the golden cross. It's when the slower line crosses the faster line. So the slower line in this case is the 50, and the 20 is the faster line because it's 20 days. And the 50 is 50 days, right? So think about it. If your 50 is catching up to your 20, that means price has now moved too slow that the past is catching up to the present. And the past is slower. So now price is dropping. So now you're entering what they call a confirmation. Once the line, the 50 crossed the 20, now that's an indicator that you're now into a downtrend. So that could be another confluence for you as well.
Can we go back to that? So show me exactly where you see the cross where the 50 is touching the 20.
Right here.
Okay.
So this line is actually a 20.
So the purple line is the 20 and that blue line is the 50. Am I looking at that correct?
You said the blue line is a 50, right? Yep, that's correct.
Yes. Okay, and that's called a golden cross, and that means that it's confirmation that it's bearish.
Not that it's bearish, but just that there's a sign that there's a reversing trend or a retracement.
Yeah, there's actually, just because you see a rejection doesn't necessarily mean the whole entire price.
Yeah, it can cross here and then cross right back. So
yeah, like just you have to like I said, confirmations will tell you whether it's bullish or bearish. So you can't just use one thing to indicate whether price will be bull or bear. You know.
Does that color work?
Say it again.
No, I'm trying. They want to see the cross more clearly. I'm trying to make sure that.
I mean, I don't even know how to use EMAs or moving averages because I actually never use indicators in my strategy whatsoever.
Oh, that's not
fair, you know. That's just my personal preference, you know. So yeah.
I have a question. I mean, with what's going on right now with the Reddit army, I saw that AMD is one of the stocks that Robinhood is restricting. Could that be something we should consider as well as speculation to drive up or downward this stock?
Dang, I did just see that too.
That could be another catalyst for upward or downward trend. So we could do all the analysis, but come Monday or Tuesday, if the Reddit army is focusing on AMD, that could put everything in the tank.
Yeah, so with that, I am kind of curious to see how that will play out. I mean, the problem is that I don't know why they're doing that, but like the restriction of like so many different stocks is just making me wonder the kind of effect it's going to have on like other stocks. So it seemed like even today, like GameStop was still rising, AMC was doing something crazy, but all the chip stocks fell. Trying to think what else. I mean, everything kind of fell, but like the same stocks that was. But so that's why I was kind of curious, like why did they start calling out other stocks? But yeah, it's gonna be interesting to see what happens on Monday. I do feel like because of everything that's kind of happening, I think that's why we kind of probably entered a little correction today because of all this volatility going on. Like honestly, the past few days have been kind of reminding me of like how it was in COVID. After COVID, I think when it first crashed, I mean, everything was like platforms was like stopping, breaking. It was circuit breakers like almost like every 15 minutes. It was chaos. So yeah, it is kind of interesting like how they decided to like restrict the trading of this, and I do think it's gonna play a factor in how AMD will perform on Monday.
Hey, Tail. This Tasha.
Hey, how you doing?
I'm good.
Yeah.
I know I'm the one gentleman, I didn't get his name. He had mentioned that he doesn't use EMA. I actually use both Bollinger and EMA because I've learned that they actually complement each other if you use it right. I use Bollinger. I pretty much use EMA to let me know when like the stocks are either rising or dropping, because I actually use I use 4 moving averages, which helps me. 2 of them really close to each other, so 10 and 20 and 55 and 200.
Okay.
And my 10 and 20 I always pay attention to, because those are ones that tell me when like it's on a rise or it's going down, because when they're close to each other. So when the 10, either always put it in green, because as long as it's on top, it's going up. But when it crosses over to the 20, that lets me know that the stocks are going down. And so then what I do is then I jump over to my Bollinger Band. And if my Bollinger Band confirms what's going on with my EMA, that's that second confirmation that the stocks are either going up or going down. So they really do complement each other if you know how to use them right.
So I just want to show what you say. You say you use the 9, the 10.
I use the 10, 20, 55, and 200.
Oh, 10, 20.
Yeah.
Okay. All right. So you see
So in that case, I'm a little bit look over at mine because I can see by colors. So
yeah, you see the colors too. Okay, so the red is the fastest one. So you see as everybody is down, the black is crossing it, the green is crossing, everything's crossing the red one.
Yeah.
On the gray. Oh, it's at the 200. So that's even. I mean, that's why I was like, even if it drops a little further, we don't expect it to drop too. So I would expect. I mean, honestly, this is a great buying spot. So you have so multiple confluences that agree. So, I mean, if you want to even do a little bit more, you could probably get like put a little fib on there. No, this is more like the area because it's the market structure.
And I see like, I mean, it pretty much crossed that one because I saw there was like 2. I make sure I'm thinking right. If it's hitting below, it's support, correct?
Yeah.
So I saw where there was like 2 instances where the support lines were. So one of them was like at 72.96, and I see the other one at.
So you got
like
about a 60.
89.13.
Oh, sorry. What were you saying?
So I saw one of like 2. I noticed 2 supports. So one at like $89.13, and the other one was down at 79. So I see it keeps, every time it keeps hitting at 89, it keeps wanting to bounce back up. So, but it finally, I guess at this point today, it pushed past, and it's like it's going to continue pushing past.
And that's what I was looking at too. And that's why I kind of looked to the left at that next level of support where the institutional buyer stepped in here at the left around.
Yeah, because that next support is like 73.46.
Yep. Mm-hmm.
And like I said, right now with this, I think it's with that GameStop and stuff like that. I think this is, I call like them big variances that throws everything outside of what normally happens. Because, you know, when you look at your seasonality, you're like, okay, this is supposed to be doing this. That's why I'm not really tripping with my Microsoft contracts, because usually around January and February, they're going down anyway. So I'm not even really tripping. But probably for some stocks that normally around this time, they may go up. Like I said, just like what last year was COVID, this year it's with this situation with GameStop and stuff. So at this point, you really just don't know, and just like got to sit back and kind of just buckle down and see what happens. And if it goes down far enough, you can use it as an opportunity to buy some contracts.
And speaking of seasonality, I was looking at stock chart in February was one where AMD dipped at. I guess for me, and I think Tego, you spoke on it today in the group, like, okay, where I struggle at is, you know, I have my certain buy points at my support, but then, you know, I struggle with, okay, at what point do you add in to average down? Like, do you wait like a certain percent? Do you wait till it hit that next level, you know, to average down some more? Because it's kind of like, okay, we're waiting now to see if it's going to break through this, keep going down to that next level. So it's like, okay, do you get in now, or do you wait to get in to average down once it hit that next point? If I'm making sense.
Like, Mike is funny. It's like, can you repeat that? I'm sorry.
I was saying that
I'm sorry. So I would personally wouldn't average down until it was like significantly down, because think about it. If it only goes down about 5 or 10%, it doesn't really make too much of a difference to the average contract price. But one that drops significantly more, so like, let's say it drops like, so it has to be like a sweet spot for you. Like, do you feel more comfortable averaging down when it's 15, or do you want to average down and get a much lower cost basis by averaging down when it's like down like maybe like 20 or 25 or 30%? So I typically, if I'm gonna average down, I would average down when it's like more than 15% for me minimum.
Okay.
Because I think even Mark said, like, I think he said for ETFs, he do it. And that's typically because, like, if it's down like 15% for ETF, it does mean it's down a lot. So in this case, I mean, unless it's like estimation, that just moves crazy. But for like stocks, like 15% isn't nothing. You could go back, you would be down 15% and be up 30% by the end of the day. And so there's no point in really trying to average down. I mean, unless you was like trying to like get more contracts already just initially, you know. But if you want to have a lower cost basis, you want to get a good gap in between what you paid for it. And that's typically more than at least like 15%. I mean, we go shopping 15%, someone to you a 15% discount, you kind of be like, that ain't nothing.
That makes sense. Because I know it's like, okay, I've heard people say too, you know, like, say if I have 5,000, just throwing out an even number, so 5,000, and then I put half of that in at my first trigger point, you know, because you don't want to go all the way in, because you want to have, you know, I was told that, okay, it's best like to wait, like do half of your investment now, and then that way if it drops down, then you can employ that other 2,500. But I like the rule of thumb of at least 15%, because like I said, it makes it worth your while if you're going to get in to add in your other half, because like you don't want to miss the run up either, if that makes sense.
Right.
Hey, Rakita.
Hey.
In terms of like the contracts that or the stocks that you're interested in, have you checked out the history of the options to see like the range of the entry points?
So no, not I haven't. I was looking at a video of Zay's, and he did recommend checking the options price to see the range. So I definitely have to add that in as just kind of a rule of thumb.
I would definitely recommend that because I actually did that for Microsoft. And so when it dropped to, I still got it at the high range, but the fact was, once I had like a visual of the range from the low range to the high range of the entry point, as soon as it hit, I went in and purchased it. So because I know like the exit for it as well. And so with me knowing that, I can plug that in to say, okay, how many contracts, depending on how much you have to invest, that gives you an idea like, okay, I could buy this many contracts because if I get at this price, because of reviewing the options chain history, then I guess say it provides me more like confidence going in because it's like, all right, even though the Bollinger Bands and the EMAs, even if they drop, if it's not hitting that range for me for my entry price, I still don't touch it.
So okay. So I was pulling up the AMD call or whatever call I'm looking at, and I plot out to the support and resistance level. But it's I guess like how would you use the price range in addition to the support and resistance level? Because even though you have this price range, you know, it's kind of like, do you compare what the support and resistance levels on a chart too to see? Because that's what I've been primarily using is, okay, where is the price point on the chart, support and resistance, and then buying at that price range that hits the support to the bottom, if that makes sense.
So what I did, I don't know if you have which brokerage company you
Fidelity.
use. Okay. See, I use TD Ameritrade Thinkorswim. So what I did was once I figure out my entry and exit ranges based on looking at the options chain, what I did next was I went and looked at what the strike price should be. And so, yeah, when I first looked at them, I was like, all right, right now these premiums is too high based on me doing my research with the options chain. But what I can do in Thinkorswim is I can actually create a watch list of all those contracts that I want. But right now it's like, all right, it's too steep for my blood. So I create a watch list. So every day I have my Thinkorswim open. And as soon as it hits, then I can set it up to where it'll send me an alert to say, okay, it hit this price range. And then I can go in and put in a contract for it. Or I can just go in and not even look at it and just automatically put in a price range, like with that tell you what I'm thinking of, the price limit. You could put a price limit in, and if they accept it, then it'll send you a notification on that as well.
Yeah. It's funny, Pantera did Crystal did a whole Thinkorswim. There's actually a video in there in the chat about it too. But yeah, you can set up your alerts, and you also set it where if it adds new contracts in there, so it's a really good, Thinkorswim has a really good alert system for that. This is the chart. We could I'll show the price history as well, but so this has been like, I just selected a 150 call for January 2022 for AMD. And so as we see here for the 150 strike, the highest has been around 872. And right now the lowest it's been at was basically 410. So right now it's around what, 515. So that lets you know that you're not buying in a bad area, because we're like in the very low range of the area. So, but this is just if you want to look at it in the chart way, we can also look at it on as far as like in price history.
Yeah, I went through like a whole bunch of them. When they say you put a lot of work in, you really do.
The last, yeah, the high, around 8 something, and then The
Well, I
lowest.
went into the actual, like what you just did. I went into the, let me see what you pull. You pulled that, is that for option chain right there? One particular option chain?
Yeah, this one particular one. So this was for
Okay.
2022.
Yeah, that's definitely what I'd be looking at to get an idea. And then I pull a couple of them just to really get a diverse, high or low for the entry. Like I said, I do what's necessary for my comfort level. I'm like Jolene.
140 January 22. Okay.
So based off of this price history, like you would pull, so you would have it set for where your lowest one is up top, and then you would kind of go down, scroll down just a tad bit.
Okay, so 140 strike price. Sorry, I just want to show
Okay.
for Alarmy Day. So, oh wow, the highest has been is around 15, or 1603, and the lowest is $3.90. And what is it today?
So it was like what, 5 something?
580? Oh no. What is it? Okay, so right now it's around 620.
620.
Yeah.
So that's, in my opinion, compared to what it was at before, that's a good.
Yeah.
And it looked like there's more room for it to go down some more.
Yeah, so yeah, Monday you might even get it around the 5 or the 4s. You might have to give me one.
So you would say just wait to buy it?
Well, I mean, the market's closed, so you gotta wait. Just saying, if it opens lower on Monday, then that's a good. That should be a good, even a better discount than what it is right now.
Okay.
Yep. But
All
I want to go back to the charts real quick. We kind of like veered off. I just want to get this in. Does everybody know then, like, how to, like, are you comfortable finding support and resistance, or is anybody kind of like a little bit not exactly sure still?
I think I'm good with it.
Well, yeah, it sounds like you kind of got the whole thing.
I need a little bit more help.
A little bit, okay, sure. All right, so let's go to a stock you're looking at. What's the stock you're looking at?
AMD. Actually,
Okay.
well, I guess, let me ask this question, because I'm actually already in at the, I have one for 140 and I have one for, I have a few contracts at the 130. And I'm just like, well, I heard someone talk about, getting out, and then because I've lost money, and I'm okay with it because I keep telling myself, just allow the process to work. Stick to the script.
What you didn't sell, right? You just mean it is down.
Right.
Right. So, yep.
So I'm okay. I mean, I still just wait, right?
It's not a loss until you sell. Right now, it's just in the market. You just gotta wait for it to, and that's why we mainly buy long contracts so that you have time. So you didn't lose anything.
20 next year. What? 22.
22, right?
Mm-hmm.
In January, of course, right? So you got a whole year. I mean, typically you get out like halfway, so like you want to look to roll that position by June, July latest. But yeah, you still got time.
And then the 140 I have until 23.
Oh, well, even better.
Okay. But if we could just do like the basic stuff. I think a little bit I understand support and resistance, but I get a little confused.
Well, let's go through it. I'm gonna control the mouse, and you're gonna tell me what to do. So when you're looking for support and resistance areas, you want to look for areas where you see a lot of like, think of support as like a line, but it's invisible, right? And it's basically where price does not seem to want to like go below. Like it just, whenever it touches that area, it just jumps right back up.
Okay.
Resistance is kind of like the opposite. So whenever it goes like to the top area, then it goes back down.
Mm-hmm.
So
Right.
think about that. So it's a ceiling. So you're in like in a room, you're in a floor ceiling. So like if I was to even zoom out this entire thing, the entire history of this of here, this will be my floor. This will be my ceiling.
Okay.
So do the same thing now. You're just doing it on a, well, let's go to the daily time frame. So now we're just the only thing difference is we're just doing this in the daily time frame. So find the lowest area of support for me.
Okay. So it seems like around 70.
Okay, let's be a little bit. Can you tell me? So you want to hear?
Up.
Okay.
Up. There.
Right here.
Well, yeah. Okay. So we're gonna start where open and close, not so much where the wick extends to, right?
You could be. It's up to you. I mean, some people use the body. Some people use the bottom of the lowest wick. A lot of people use that actually. Whereas they keep it at the one that's the most bottom. So here.
Okay.
Yep. So. All right. So find another area of support.
Okay. And it needs to touch at least 2 to 3 times, right?
You want it to at least touch more than 3 times, actually. Two
more
times is just not as much confirmation for you.
Okay.
Or what we would say is that it's more like we consider that. So you sometimes hear people say like, oh, it's a strong resistance and oh, it's a weak resistance. And you're just probably thinking like, well, how do you know when it's stronger or weak, right? It's mainly because you look for how long, I mean, how many times, the more times you see it being respected, the stronger it's going to appeal. So like this, bam, it's touched here, bam, touched here, touched here, touched here. It's like to you, you're automatically gonna think that when it touches this area, it's gonna bounce back up because it just has, like again, we look to the left for past history and price remembers history, right? Price remember where it's been. So it's signs now that price definitely remembers to not go past below this area.
Okay. Okay. The second one, this is where I get confused. Because it's just, I don't know, maybe I should, does it matter if you just like stretch it out a little bit? Can you see it a little better or?
Yeah, we can do that.
Okay. Oh, I don't know if that made it better. That looks like a good place where you just.
Yeah, I didn't mean to do that.
Well, it looked like a good place. So what is that, around a little under 80? Down. Okay, there. Wait, no, no, up a little bit. There.
Nice.
Okay.
So you notice that the wicks was kind of touching the area and they kind of stay there. Good. Okay, I found another one.
Okay, let's see. Up, continue going up, up some here, around here.
Now remember, it's the ceiling and it's the floor, so.
Oh, what are we doing the ceiling?
We're doing support. Just find me levels of support.
Okay. Okay, right there. Down. Okay.
Okay, so this one's gonna be a little bit more complicated. So for this, what I would actually look at in this is that I would look more in this case for something that kind of candle formation. So right here, we was talking earlier about is institutional candles. So seeing this big engulfing candle will be a sign of institutional candle. So I will kind of use this area as like a level of support area. And the reason why I say that is because you could kind of see a little bit of levels where it kind of respects the area.
Oh.
So just like you just want to like kind of like be able to just look a little bit deeper, just so you kind of, because sometimes you will notice that like these places price does respect like a support level. So no, that's still good. That's still area. Like remember, at the end of the day, we're just trying to find areas of levels because we're people that trade long term. So because of that, we don't need to get the best entry. Like if you're a scalper or something, we just need to get in a good discount.
Okay.
That'd be a good entry. So good. So in this case, let's see, do you wanna, no, let's keep going. So find another one.
Okay. Up some. Okay, down a little bit. Well, I guess that's kind of close. So up. Okay. Down a little bit. Right underneath.
All right. So you want to bring it down a little bit?
Let's see.
This was a little bit
maybe up a little bit then, because does it matter if it's so close?
So this was a little bit tricky. So this isn't really a good area where I would say it's an actual support area.
Okay.
However, again, you could kind of use certain candles to kind of say something to you. So in this case, maybe like around here would be something that I would look at. But and many what you also can use in think about it is like support and resistance. So what becomes resistance becomes support. So this is actually at the top of trading ranges. So this is actually a resistance level. So this can be what you would consider a support area because it was a resistance area. So, but technically this was an entire distribution schematic where price kind of like did a that and then price went down, but reaccumulation. All right, but no, that's good. You got it. Like, it sound like you got it. You didn't.
Okay, just have to practice.
Yeah, you just gotta keep doing it. Like, yeah, you got it, and then you just do the reverse when it's like with areas where you see where price respects where it doesn't want to go past.
Thank you.
Okay. So does anybody else want to try? Anybody else got like?
I have a question. How do you know which time frame to use?
So
the day,
you use them all.
Confused by.
Use them all.
Because they change. You go from like a monthly to a day. The things kind of change.
So what you want to do is you want to get a big overall trend from the higher time frames. So this automatically tells me that we're in an uptrend from the higher time frames, and then you want to work your way down. So on a zoom out level, we can see that still this is in an uptrend, right? And then you kind of chart from here. Technically, if you're doing like a day, you kind of like can look at, like the last 3 months maybe, or month. It just all kind of depends on how the market structure looks. Because to me, this looks like a phase where now this is like a new. So something to look at too is like to know like when you're into a new market structure area. We looked for where you have like. So it's kind of like when you understand the structure, you kind of can see like this is like equal lows. This is like the top of your trading range. As soon as we broke above this area, we entered a new structure. So what I mean by that is price was kind of contained in this area, and we've shown signs where it kind of broke here, broke here, broke here, broke here. But then once we broke this area, once we broke past this was now a new entire trading range. Does that make sense to everybody?
Yes.
Great.
Is that considered, like when you say the trading range, is that considered like a channel?
A channel?
Yeah, like the trading channel.
You can think of it like that, yeah.
Okay. So once it's past that $86 range, it's into like a new, or is it trying to form a new channel at this point?
Well, so at this point, this was from this previous, so like once they kind of cross this area here, this was like a new trading range. But for here, this can still be the area for here. It's kind of when it gets a little bit further down that we'll get a little scared where it's like, okay, like that's a big breaking structure. But right now we're still kind of in the vicinity area because we're still like in the resistance area of what was last. I mean, we're still like in this, what was the resistance area of the last trading range. So it's kind of like the support area. So we still kind of in this a good, technically in this trading. However, it is going to scare you because it is breaking through it though.
Did you notice reaccumulation on this, by the way? Because I'm looking at my wall, because that's basically a Wyckoff wall, right, on that side of my wall. But the only reason I was projected it to go lower was because a creek has to be formed, because the previous one was in a valid creek. So if a creek does get formed.
Oh, so it would drop. Yeah, it will drop pretty low.
Yeah, it would probably go to 73 possibly. Which doesn't seem possible because of like, you know, everything. But from what I'm seeing just chart wise, yeah, I think.
No, I don't think it has to go that low. I think it will probably do something like.
I mean, it can just go like, you know, a little bit more right there and possibly.
I think and then you'll see that rise up there. I think I can see it going like to right here.
That's what I'm hoping.
We're actually really more like here. Because that's still a breaker structure here, and then you get it to where it gets to that like this IFC candle, and then you see it. So,
I mean that.
Okay. So a creek just basically means that what they're doing is price is trying to get more supply. I mean, trying to get more supply to increase the demand. So it breaks through, so that this is the structure, right? And we're still in this area, but once it breaks through down, it's trying to basically, it's kind of like what we'll consider like almost like a shakeout in a way, a quick shakeout. So this is when they're trying to like, for traders, if you've been like a trader, you'll do a simple support, And this is like what Nez was saying earlier, like you just don't want to do just strictly sometimes just straight support. Mainly because you will see times where a price would just dip down lower below the support line and basically just to shake out loose hands. You know, y'all know how y'all kind of be when y'all say like, well, price drops, so do I think I should sell now? They're doing that to get y'all. They want y'all out to get y'all liquidity from what y'all shares y'all got. So that's what they typically doing. It's the manipulation of market all the time, right? If you just go in the past, you will see those shakeouts a lot. Like this is a support line here, and then bam, it dips down, take out the little loose hands, and gets back and goes back on his way up. See, break down, start trading this trading range, dip below, and start rising up. So this would be considered like your creek. Break structure, and then bam. This was like the trading range. Broke through here, but then it rolls back up pretty fast. Same thing here. Trading range, break the structure, this big buy candle, and then starts going back up. You can just go to the left and you'll just see a lot of them. But you want that because when you see a lot of them, then you can anticipate it. And if you can anticipate it, then you could get in and you could just say, oh, that's that shakeout. Good time for me to enter now at the support line. Does that make sense for everybody? I feel like I want to make sure like I want to make sure y'all kind of get in that.
Oh, by the way, when it comes to like reading on schematics and all that kind of stuff, all you would have to technically do is like whether you're on your laptop, your phone, your iPad, whichever it is, you would just go to google.com, right, and type in Wyckoff. And it'll probably be one of the first few links. It's going to say Wyckoff School of Charts or School of something, something. Yeah, if you type in Wyckoff, basically. Yeah, and then let's see what we got. If you scroll down. Yeah, these are the pictures of it, but I was going to show them to where you can. Yeah, there you can just go here. This is no, not this one.
Oh, I mean, I know what you're talking about. I know what you're talking about. This one.
Yeah, like.
Oh no, not this one. I saw it was. Oh yeah. Stock charts.
So that's what I used to actually. I mean, there is a course on Wyckoff. I think is really boring and too long. So all I did was just read this, and then I applied it into the charts, and I studied the charts again and again and again until I found every schematic I could possibly find. There are examples as you go lower in the school stock charts area. And I believe like it's all the way down. But yeah, this basically just shows you what we're talking about when it comes to Wyckoff schematics. I personally think this takes time to learn because your eyes have to get adjusted to the chart in terms of seeing the Wyckoff schematic. I don't even think I'm proficient in it whatsoever. I'm still learning. Well, that's what I claim. But yeah, I just tend to say that, but I just don't really believe I'm very proficient in it. I can notice it easily. It's just that there's still a lot more to learn. There's a lot of different variations of schematics. This is just one of the few basic ones. But as it gets more advanced, you're going to see a lot of different variety of reaccumulation, redistribution. Like I keep looking back because I have a wall just full of pictures of all that kind of stuff on the wall, and then that side has like whatever. Yeah. So you're going to see all this here. So all you would have to just do is type in Wyckoff and then find school.stockcharts.com. So yeah, that's where you can just read on it. And then you're gonna practice looking at it on your chart, or I mean, you can just pop it up on your iPad, keep it right there, or have your screen split, and then try to find it on your screen. And the more you do, the over time it just gets easier. But yeah, it takes time. Well, unless you pick up things really fast. Yeah. but that's where
And
you
us.
for the person. Oh, 2 questions. Let me see. There we go. Perfect.
Yeah. So it's just a matter of if you just go and look at the charts, right, and you just go and look and just keep trying to find and compare them. So like preliminary support, when it's kind of going into markdown, and that's kind of like the first area of support. And then you notice where it's like stop selling, and you see that big retracement back to the top of the trading range. This is like just basically that. And accumulation is like you're getting a constant test of the support, but what it's really doing is just getting the liquidity so it starts going on this bull run. And then distribution is the same thing as well, the constant testing of resistance. And resistance basically saying like, nah, y'all gotta get out of here. And then it goes down. So let's just win. So it's just more so just damn, she said it sounded like the Greeks. Sorry. But I mean, a quick way of also thinking about it too is you kind of want to see something that looks like it's kind of being scooped up when it's accumulation, and then something like kind of like a U when it's a U when it's like distribution. So
you said, say that one more time. You said the under like a U when it's what? Which one? Accumulation.
Yeah, it's just basically meaning like, you know how like you got, you know, you're going in, just coming back up. So it's just think of it like it's, you know, up.
Okay.
Upside down is just seeing the constant testing in the sense. Like what's really going on is you're just getting the constant testing and the shakeout and then the drop down.
Okay.
Yeah. So Kavi, can you say what's kind of confusing you? Oh, I gotta unmute or something. Can everybody unmute or? Okay. So was there anybody that still has like a little trouble with support and resistance though? I want to make sure everybody got that. Like that's the one thing I want to make sure everybody gets as far as support and resistance.
I'm gonna watch the replay, but this has been very helpful. Thank you.
Okay, good, Nicole.
I'm gonna call out my accountability partner, Arnetta. You should try something.
Hey, yeah, I like that.
Are you kidding me, Erica?
No, I'm not kidding.
Oh my goodness.
I'll go next.
All right, but I did. I made a complete fool of myself the other day. But okay.
No, you did not. No, you did not.
Thank you, Tayo. Yeah, I struggle with the charts. I'm not gonna lie. Then again, I struggle with everything. So at this juncture, but
all right. So what's the first thing that you when you look at a chart, and what's the thing that's like just freezing you? Like what's the first thing that just makes you feel like, oh, I don't know what I'm looking at?
I guess I'm just trying. I want to make sure that I understand what I'm looking at, and it seems somewhat easy when you're trying to find, the support and resistance, I guess. But then I start like second guessing myself. So when I look at this chart, it's kind of what is this? What do you want? The daily?
Yeah.
All right, so like when I see like the kind of, where's your mouse, Tayo? Right there. Yeah, perfect. Okay, so if you go down, right there, up a little bit, I thought that would be like support.
Well, you are right. So you wanna just look at the areas where you see a lot of prime points, just a lot of touching of price.
Right.
Yep.
Okay. And then I think sometimes I think the obvious is pretty good, but I think I start getting a little confused within the gaps, and then also like finding that new level of support. So would you like me to try like another level of support or try to find resistance?
Let's just try to find another level of support. But so real quick, so when you see gaps, try to envision gaps as like a long candle. That's all it really is. In the sense that there's no price that's in there though. So gaps will sometimes get filled. If you notice that it's not always gonna happen, but candle, think of this as like it's a long candle, but it has to get filled. So price came down to at least like the half part. This is probably like the halfway point of this gap, possibly. But gaps always get, oh, let me not say always, but when you see a gap, typically gaps will get filled in a few more days. So
is there a time frame of when gaps will be filled?
So they say on the average, gaps get filled for, actually, let me look at my sheet. So it looks like gaps tend to close in roughly one trading week, 5 days. And then that's for gaps that gap up. For gaps that gap down, there's typically about, I know it's longer, I think it's about, I'm not seeing it. Oh, when it's down to 6 days. So 5 days for up days, 5 for up days, and 6 for now. But they even say still it can sometimes take up to like 30 days. After that, if you don't see it, then typically it might not get filled unless it's like a big catalyst to bring price back to that area.
Okay, I do remember that. I do remember that they always say they get filled. It's just a matter of time.
Most cases, sometimes they don't. And even there's actually a whoa, this site looks different. I'm sorry. This did not look like this. Wow. This is crazy. I ain't been on here for a minute. So this basically is telling you like how many gaps it's had and how many been filled and how many if not. So 7 has been, this is AMD. This is only back checking for back up to a year. So 4 have not been filled. And this is all from the summertime. So I doubt these get filled because they're around 50, 69, 62. So, and you will need to retrace almost 50. No, they're not getting filled. they're not. It's 18. Well, no, I don't see that happening still either though. So, but this one from November 4th, 10%. It's already dropped 10%. Actually, it's dropped more than I think 10% maybe. I just don't see that. So you can always kind of look at this to see if you think this gap will get filled from here as well. But as you can see here, it's filled up most of gaps, but not 4 of them. So.
Thank you for that.
And FYI, it's Tayo, everybody. Forgot to tell y'all at the beginning. So
I apologize if I've been mispronouncing your name. I probably have.
It's okay. What I also want to, oh man, I'm supposed to order some food. Shit.
You got to eat, Tayo.
But let's just like Arnetta.
Yes.
So next point, let's try to find areas where you see price that seems to respect. And when I say respect, you just see what I mean is that price just seems to not be able to budge from that area. I mean, not go past that area. So what would be the next area of support?
I kind of thought right where you were for a second, but it doesn't. So if you go back up a little bit, right, go up a little bit more there. But I don't know if I'm looking at that correctly, but I thought, because that's my problem. I'm looking and I say, oh, 3 candles. So that must be, you know, a new level of support, but bear with me.
So no, that's very valid. I think we just did that too earlier. It's just that these areas are very there's a lot of it's very in the middle of the trading range.
Right.
So it wouldn't even be oh.
What you ordering, Tayo? Cheesesteak?
No, no, that's very distinct.
Oh.
But you just want to find areas where it's so right here, as we can see, there's areas where like there's wicks touching. So that would be kind of like a little sign, like, so we see one here, 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 here.
Yeah.
So this would be like a thing you could say.
Okay.
Okay. Let's see, what else do we got?
Safe, like Tayo, if you were to go up some more, all the way up. Oh no, keep going up. Like I like move over a little bit to your right. I apologize.
You said to my right?
Well, yeah, well, my right. So yeah. Yeah, stay there. Now go up for me a little bit, please. I don't see now. I wouldn't have like I didn't know if that would be a new level, because when you spread it out, I know you talk about like the touching, but I kind of get confused on that a little bit.
Well, what about the touching?
I guess I get confused because I thought that it's like, again, the 3 or more, and if you see them like kind of and you used the term earlier and I've forgotten already, so I apologize about that, but
You're fine.
when they're kind of like gathered together, to like, you don't want to do it where there was like earlier when she said it was like 2 and you said, well, you want to look for at least 3 or more, right? So when you're going, you don't want to look at a single stick, right? Like you again want to look at the very least it be 3, and then that'll be like your new level. And when I say 3, kind of like in a row, correct, excuse me, like together. Does that make sense what I'm trying to say?
Yeah, so what you can do here is, so if you notice that like this candle's here, you can kind of look, like I said, like look to the left, history. So you know, so you can kind of look and see like this area has been like support, it's been touching here. And you know, you just again put it here. So you see it's time to touch here. Get a little half point for that one, but what we see is touched here, and then we see the candle touched here. So I wouldn't say this is like necessarily a strong area, but I would say also remember like this is also now was the top of the trading range, so the previous structure. So this is like the resistance, so you can always discount on resistance to be a sort of support level as well.
Mm-hmm.
So
I think I just have to practice more. Because I think Erica and I tried it once before, and I think I did pretty good before, but I tend to get a little.
No, you did good here. You did good. You got it. Just remember everybody kind of does a little different, but you kind of got the general. You just want to be in the general area, and you're in the general area.
Okay. Thank you.
Okay. Does anybody have any other? Does anybody else kind of want to try this out?
Can I try one?
Yeah. Do you want to? Let's go with something different.
Okay.
Can we use Apple?
Apple, yeah, we definitely do Apple. Okay, let's
128.
Let me. This is so easy because it's so respectful. Oh, this is a nice chart. I would actually look at it like this. Okay, so let's try. Yeah, let's start from here. So let's go. Where am I starting at, Erica?
Okay, so keep in mind I'm still like practicing, so guide me. If you go down a little bit up, keep going, keep going, keep going. Like keep going right there. Would that be considered one?
Yeah, it's not this. Yeah.
Okay.
We see a little bit. We see touch point here, touch point here, touch point here. Broke through here a little bit, but like I said, like these are like what I consider shakeouts,
Mm-hmm.
and kind of close by this area here. So yep, good.
Cool.
Next one.
So that's support. And then for resistance, would it be like by that 120 mark?
So let me change this to a different color. So, well, actually, let me make this one green. Okay.
Yeah.
Um,
So
wait, you said 120?
yeah.
Okay.
Or is that not one?
So
It's
this
like
is,
the channel, right?
yeah. So this would be kind of considered like a little supply zone area. Yeah. No, this is actually a good area too.
And then once it breaks out, it becomes a new support level.
Right.
Right.
So yeah. So you're talking about because of here, right?
Yeah.
Yeah.
Okay. So that's it.
Oh, keep going. I'm gonna we at least level this all the Apple parts everywhere in Apple. So what's the next one?
Okay. So
Fine. So this one will be support. So
mhm. And then would another one be above the 124 mark? Keep going. There.
yep. Yeah, that's not yep, that's a pretty good area.
Okay.
You see a little bit of respect here, here. So yeah.
I have a question. So how many resistance levels should you have?
So well, we're just trying to back further. I'm just trying to let everybody a little practice, but you don't necessarily have to focus that far back unless you want to trade on a much higher time frame and you believe price will have a reason to go back that far down. Typically, if you're looking at it, I probably would chart like honestly, no, I probably would chart from today. I would chart like looking back up until like November.
Okay.
Because typically price will like leave the area that was in like after like about 2 to 3 months. So I would look at it from like January, December, November, or maybe October, but this would be the general time frame I would like look at. So
But again, when you're doing that, I mean, just say we're charting this for the first time, you would just have one resistance and a couple of a few support levels, or
so wait, are you asking how I personally would do it?
Yes.
So how I personally do it, I'm not even charting up all the supports and resistance, to be honest. I'm more so looking at like where I think I want to buy at. And so where I want to buy at, I don't necessarily need to chart everything up. Typically, I'm just looking, again, like the way I chart is, depending on how quick I just want to look at something, but the Apple, looking at this, I will be looking to get, if I wanted to get in Apple, I'll be looking to see price push somewhere around, when it gets around here, will be when I probably will look to enter. Just from looking at it from here and seeing the run. But however, I would also expect maybe price to come back down here for Apple as well. Especially if it wants to get a little bit more supply for a bull run. So
Okay.
Yeah, so.
Okay, thank you.
But for the charting in general, it's really helpful just to start being able to see these things like trend lines, because I don't need to draw it to be able to see it, but for you to get your eyes acclimated to it, it's really useful to kind of see what people are referring to when they talk about trend lines. Just so you know how other people are trading, how other people see it. It's really useful. So to get acclimated with that, how just the eyes to see it, is to start charting in the beginning though, to get familiar with market structure, how people see the charts and everything, and get familiar with it. So here you see, like I said, we see the trend line, and like I said, price typically wants to respect the trend line, but we see that it broke through here, and then now we're seeing like a little bit of a downtrend. So,
okay, thank you.
Yeah, every time you see a little break, that's kind of an indicator that you're gonna see a retracement back. So, things to also notice too is like just like with structure, like even the shapes and the momentum and stuff. Like for me, I live by the rule that if it's fast, it won't last. So like here, fast don't last. So when things drop so dramatically like that, I don't expect it to stay that way for too long. So again, like when you see price on these trend lines, I like to see what I consider healthy price action. But when it's starting to get skewed, that's when you know you're gonna see a big retracement back. It's just something your eyes just automatically start seeing. Again, so when it's slower and it's a little bit less sexier, it's moving slower, but you notice that it's more healthier, right? But when it's fast, like here, it drops. So you start to keep that in mind. When it rises fast, it tends to drop fast. Sorry, too much. So especially when that's why it plays off the fact that like when we look at these big engulfing candles, we talk about algorithmic, because they basically are coming in and just driving price up. But there are people who might have had orders, other institutions that had orders too, that didn't get the orders filled. So that's why we tend to think about when price come back to this area, that price will come back to fill those orders that were left.
Okay, Erica, go ahead and finish charting.
I totally took her whole thing.
No worries. I think I was done at that part, right?
Yeah, you was. And I mean, I'm pretty sure you got it, but I guess the thing would be like, what would you consider the resistance line from here?
A little bit lower than the 140. Right there.
Okay.
But there's only two. So would that be a no? Would it be lower?
You're in the general ballpark. I think this one will probably be more respected though. Well, actually, we'll move it slower here, but I think this one might actually get respected more. Actually.
Okay.
But
I was thinking the same thing as you, Erica.
Yeah, that's where I get confused because like the resistance, it breaks out. So I mean, technically it's not a strong resistance, you know?
mm-hmm.
And then I didn't know if it had to like stick with the top of the candle versus like in the middle of the candle. So if you put it down to like the 137-ish mark or a little bit higher than that, if it's like in the middle of that, the two candles.
So you're talking about right here? Or
No, back where you had it earlier, right there.
okay.
You see how it's like in the middle? Well, not in the middle, but it's in between a candle, you know? So it's not like at the top of the candle. Does that make sense?
No, I see what you're saying. Yeah, so because this was the top.
Yeah.
I think personally I'm just thinking about two different principles that are conflicting me. Because again, like fast that it kind of touched here and it dropped. So I wonder if there's like some order still left there, especially because drop. But then again, it does seem like this is more of a level where price kind of reached and couldn't really get to, and the price dropped as well. But we kind of got to go through here. For sure, we know that this one will be a resistance level. So I think this area would be something that if I personally was looking at, I would be cautious around this area as a resistance level, but typically I wouldn't even look at this because I'm not looking for a resistance level in general, because that would be like for me to sell. Only if I was selling it, if I was looking to sell, like I said, I got in the trade here and actually like here. So if I got in the trade here and I was looking at the charts, then this would be considered a resistance level. But if I get in here, looking at the charts from here, then this would be the one I would just look at this to be safe.
Okay.
But what I would do is like, it would be something like I'll have like several contracts and I'll probably like sell a little bit and see what breaks through here, whatever. Because the reason why I would do that was because I was expected to break through here, and then drop back down, and I could get back in, and I could like do the same thing again. And then this time I would expect it to kind of like break through though. But for us, this wouldn't even be a concern. This is not even a concern for us. But for your general information, yeah, I would say this would be when I'll start looking.
Okay. Cool. Thank you.
Anybody else? Anybody got any questions? Anything that wasn't clear?
I have a question. So since we're kind of getting like, the long-term contract, like the leaps, would it make any difference like if you're charting on a weekly versus a 1 day?
Yeah.
Oh, you can answer that, Ness?
I mean, I can. Yeah, I mean, there's a variety of things that you're gonna look at when it comes to looking at different time frames. It just depends on what you're looking for. Like I spent a large amount of time charting on the minute, like the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. I took overall projections from higher time frames. So when I look at like the daily, the weekly, the monthly, that just gives me like the overall aspect of trend, right? So that's what I'm looking for is trend and like, you know, where it's going, where the market's direction. Then I would go to the lower time frames, such like the 4 hour, 1 hour, to look for like possible entries or rejection zones or like, you know, supply zones. And then once I find once I find like support and resistance zones, you know, my market structure, like all that kind of stuff, then I start going even lower and lower and lower to find like my precise entry areas, which is like how I basically go from all the way from the monthly all the way down to like the 1 minute. But it also depends on what what stock you're using will help you like identify like where exactly do you want to trade from. Like for example, Apple, you can absolutely do from the daily time frame. Like you don't need to go to the 1 minute time frame. It's something that can be traded in the daily. Like some stocks, such as like Tesla, if you go to the daily time frame with the monthly or the weekly, it's just gonna be like this. It's just gonna be up, right? So
that's really good.
There's gonna be absolutely no market structure. Like there you go. Like you can't really do much with that. But what we do know is that we're an uptrend regardless of what we're looking at. It's currently going up. And then when you go to the weekly, you might see a little bit more structure, but it won't be that much of a difference. And then as you can see here, like now you can still see a little bit like, you know, price action. Then you start going daily. Like there's more price action than daily. You can actually, like if you see right there, we saw a rising wedge and then we saw a breakout that potentially continue on rise up. So like exactly where his mouse is. So yeah, so if you just ask the trend line, you're gonna see like how, yeah, like right there. And that's called the, it's just called a wedge, a breakout wedge, whether it's bullish or bearish. Yeah, as you can see right there, it shows the indication of you know, a rising, a bullish, you know, a bullish momentum, bullish movement. And then let's just say you want us to enter right there, you could, because you have that, like, you know, so just boom, 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 and then it just goes straight up. You know, sometimes some people wait for rejection, some just enter a trade, you know, it depends on you. And that would be a daily aspect. But let's say it hasn't broke out yet, you pretty much go to like the you just jump straight to the 1 hour, or you go to the 4 hour, and then you're gonna start seeing like where exactly would I possibly enter? Like where can I enter from? You know, so that would be like how you kind of technically like yeah, if you push the back tracker and then you see that, yeah. So basically what I would see here is that I can clearly see the price is struggling to come down, you know. So you know, there's a couple of indication here where I can already see the price already activated its area. It fills some gaps, all gaps have been cleared out. So technically what I would do is wait for a break of structure. As you can also see there's liquidity up there. So which means I'm gonna want to clear out the liquidity. Like up there, liquidity basically means how do I put it? Where there's a bunch of stop losses or, you know, whatever they call it. But it's just where you know, price tends to reject a lot. So yeah, just right up there, just like a lot of liquidity sitting. So basically what I do know is that I would wait for price. Either, I mean, if I go to the 1 minute time frame or the 2 minute or 3 minute, I can definitely find an entry and say, this is
Yes.
where I'm
Remember what Mike said.
You said what?
Remember what Mike said.
Go back to what?
Mike, what he told you.
Oh, you mean regarding the liquidity area?
No. I mean the message, the text message.
But which message? What am I missing?
The iMessage you just sent me. Yeah.
Okay, because I thought I didn't. Am I missing something or okay? Do I continue on?
Just a minute, slow it down.
Oh, okay, my bad. So yeah, but this is like the 1 hour. So, but I know if you looked at the 4 hour, it would be a rising, the breakout wedge. Okay, so yeah, just off the 4 hour alone, we can see that we are going to wait for a break of structure. Without a break of structure, we're going to wait for a break of chart pattern. So that previous trend line he drew on both areas will basically indicate that, okay, I need to wait for price to either break out or in, or you can find your you know, your entry based off like lower time frames. So yeah, there's a variety of ways you can use like multiple time frames, but it just depends on how it's used and what it's used for. Some people just trade on daily because they like riding the long-term gains or just like the long-term way. Some people get in the 1 minute time frame because they, you know, they scalp or they're day traders. Me, I look at my entries from the lower time frames but I look at the daily projection for the long-term growth, you know, whether it's going down or up and all that. But yeah, that's basically how I use timeframes. But there's a variety of ways where you combine them together. It just becomes more natural as you just chart more. Like, you know, I spend hours just looking at charts for no reason. Like when I wake up, I just look at a chart, you know, so it's just something that becomes second nature to me. You know, it's just like, I mean, it's not like I find it fun. It's just something that became part of my daily routine. You know, I just wake up. If I'm on my phone, I'm bored, I just look at charts, you know, try to look at whatever I can see, you know, so it becomes a routine, which is why I would just say that like just noticing things becomes extremely easy. And like, I wouldn't say I learned all this from courses. It's just more like I just learned from continuously looking at charts again and again and again. But I did watch a lot of courses, I did. But yeah, that's just my aspect on how you would use time frame. But this is also another person you can enter, because I mean you can see that if you redraw off the trend line, you're gonna see that's actually gonna reject off this trend line. Then you can technically enter there. You know, since this is actually like a bullish pattern, and you can also this is also what we call a flag. It's just not very clear, but it is another indication of a flag. So basically, flags just go like where the price goes up and then kind of rejects a little bit, then breaks out again. But yeah, there's tons of chart patterns here and different schematics, and I do kind of see reaccumulation, not too much, but there's something there. Yeah, let me see. Yeah, there's a lot of different forms of reaccumulation. So yeah.
So basically, you're using the higher time frames to kind of determine what the trend is, and then to get your entry, you would look into the lower time frames.
Yeah, correct. Yeah, I do see reaccumulation, but yeah, yeah, that's exactly what I use it for. But I mean, but like I said, it depends on what your goal is at that moment. So let's say that you just want to look at trend, then you don't need to look at the 1 minute time frame. You don't need to look at the 1 hour. You just go to the daily, the monthly. Just actually go to the weekly, the daily, and the 4 hour. That will really tell you the trend of what's going on, right? But then let's say you want to enter something right now. You're gonna want to go to like the 1 hour, 2 hour, 15 minute, 20 minute, 1 hour, you know, all that kind of stuff. You know, and play around that area. But yeah, like I said, it depends on what you're trying to do at that current moment. Like, you know, so if you're trying to enter a trade at that moment, just go straight directly to the lower time frames. If you're just looking at price action and where the market's possibly going, the higher time frame. So basically 1 hour and above. You know, so you know, yeah, there's not too much price action here. I know prices struggling to go up. I mean, but it's Tesla. So regardless of what you chart, I mean, I do chart it and still predictable. I'm not gonna say predictable, but it's still doable. But it keeps going up, you know. So so it's gonna be what it is. But yeah, Tesla is overall buy, you know, just based off the daily time frame. And then let's say I went to the 4 hour, it's the overall buy. So the thing is, since we know it's an overall buy, our goal is to say, where can we enter? Are there any gaps? Are there any imbalances? Are there any chart patterns? You know, are there any confirmation based off like, you know, Wyckoff schematics, like whatever you're looking for, depending on whatever your trading method is, that's what's going to tell you. So why am I at the 1 hour time frame, or what am I looking at the daily? So everyone's method is different. So that's why I said that you look at time frame depending on what you're doing. But the most basic concept towards looking at time frames is strictly that higher time frames are for looking at the trend of price action, so whether it's going up or down. And then the lower time frames, like I said, strictly for entries, you know, looking for chart patterns and all that kind of stuff, or confirmation, you know. So does that make sense?
Yeah. Yep.
Perfect.
All right.
Thank you.
Can I ask a question?
Go ahead. Mm-hmm.
All right. So based off of, 'cause we got Tesla pulled up, and right now, like say if I'm looking to get into Tesla since the chart is pulled up, then I will start at, okay, let's say right now we're on the 1 hour, time frame. So you would start there first, and then we'll open this up, and then what would then be your next step if you're not using levels? Because you're saying you guys don't necessarily use levels to determine your entry. Is that correct?
No, it's not that we don't typically use them. We know we just we can obviously you can see here like this the levels is that like there's one here, but and then there's one here. But looking at price in general, where do I expect price to be? Well, I don't enter in this time frame, to be honest, and I don't know where this happened. That's weird. Oh, you know what? It's because I'm on replay mode. Okay. So sure. So if I'm looking at this, then I'm gonna determine one when I come to options. If I'm doing a leap, it's a little different strategy, a little bit with different ones. But for leaps, because it's such a long term, I like to get the best price as possible. So for this, I typically will say I will want to wait for price to. I don't think it'll come back this low, of course. But oh yeah, I forgot Tesla. This is Tesla. So I have to like readjust the way I think about this. But I will probably look for Tesla to come back around this area if I was to like get in. Because the first thing is I'm looking for too, though, is I'm looking for the band to be smaller. I would look for like price to be below this midline, which is like the 20 EMA. And then, like I said, I would prefer it to also be at the bottom of the band as well, but being below this would be fine. And it all kind of depends, like how patient you want to be. Do you want to wait and be as patient as possible, and are you fine if you miss it, or do you want to be a little bit more aggressive and say, okay, I'm gonna get in here, so you'll get in here, see being expecting price to come back here, and then average down. If you're gonna buy more Tesla contracts, like hopefully if I can get a price like around this area.
So basically, then you're going off of your EMA line. Then that 50, you wanted to be below that on this daily chart.
Yeah, that's what you will want to do like on that.
Okay, got it. Okay, that makes sense. And just watch the daily chart every day. Set your limit order for it, and then that way your price trigger will go.
Mm-hmm.
That makes sense because I was calculating my entries off of the 6 months, so I'm not familiar with the daily when it comes down to.
Oh no.
Yeah, and using support and resistance. So that's why I'm like, okay, take it square one for me. Like, okay, if you're looking at a chart, pulling it on a daily, go like, what actions would you do? Like, if you were really trying to determine your entry, so that it'll make sense. But I see that you have the 50-day EMA, and what other things do you do?
So sorry. Well, I try to give you actually a simpler way of doing this because I don't want to like make this more complicated than it needs to be. I don't think we don't need to make it too complicated. We just need to really get like the really good prices, right? But what I was saying is that you could have this be where you can add and you can use the EMAs like I believe it was Natasha that said it earlier. So you can use the EMAs, and this can kind of be like your guideline too. So maybe you might make a rule for yourself where you need price to be below these two top lines.
Mm-hmm.
Or you say you needed price to be at the bottom of the Bollinger Band, and you want it to also be at your 55 EMA.
Okay.
So that could be another sign for you. It's just a matter of like how aggressive you want to be or how conservative you want to be and how patient you are.
Okay. And then like when we're doing, because Tesla is just an individual company, like if we're doing like an options contract, you would still pull up the, like say if for XOK, for instance, you know, you'll pull XOK and then you would base your entry price off of where the underlying XOK price is versus the options price.
Oh, so yeah, you're gonna do that. So you said have the option and the. So yeah, it's really good to, because if you have an idea of where you think price is gonna be at, then you kind of also look at where price was at for the option chart and kind of get a picture of that as well. Can't do it on trading view, so I can't show that, but.
Tayo, did you order your food?
Yeah, I already. It's supposed to be here soon.
Okay, just checking.
Thank you. Well, so what strike price was you looking at?
For when I say XOK, let's just I think the days was 175. That's where it's at now for the 22s. So just do I'm sorry, 23s, 175.
Okay.
And I really appreciate y'all taking out time to do this too.
I don't know, problem. Options chart. So this is the. And then so you can add the actual XOK. So it'll come as a line chart. Let me get rid of these. I'm gonna change these settings. Actually don't want all these lines just for this. Okay. So just to show that, like, if I say, okay, I think price is gonna come to, so for XOK, say we say I'm getting an XOK here. So what I can say is that I expect, and yeah, based on this, you can kind of say you expect XOK to come like to like around here at the lowest. And so here, you know, you're buying at the high. So this will be an area where I would want to hold price. Well, not hold, but if I wanted to see if price would come down, I would send an alert around this area to get price over at least around the $4 range.
Gotcha. Because that's kind of where they kind of fought at a little bit between the sellers and the buyers. That's the kind of like that
Yeah.
thing that you were saying.
Because I don't think you're gonna get. I don't think it's gonna. You're not gonna get XOK to drop to here. You're not gonna get that. Yeah, you're not gonna get that at all. It's because it's currently at what, 128. This is back in November. Nah, I would expect the lowest it would go would probably be like around the 127. So maybe you could get it around this price point, 5. Yep.
Okay, that's what I was thinking too. Thank you.
Yep. Well. Okay. Does anybody else have any other questions? Because if not, I want to eat. So
go eat. Go eat.
Thank you so much.
Thank you.
All right. And this should have been.
Thank you.
Yep. So this should have been
Thank
recorded.
Kyle, thank you both for everything.
Oh yeah, so it's recorded. So I'm gonna definitely post this in the chat too. All right.
Okay. Good night. Bye.
Good night. Y'all are.
Bye.
Everybody have a good night.
Thank
Good night,
you.
everyone.
Everyone,
Okay, bye-bye.
good night.
Bye-bye.